Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 4th, 2025, and we're diving into Hewlett-Packard Enterprise's latest earnings report for the fourth quarter of fiscal 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss HPE's performance, especially given their transformative year and the strategic moves they've made.
Revenue and profitability overview. Let's start with the top line. HPE reported a net revenue of $9.7 billion for the fourth quarter, marking a 14% increase from the previous year. John, what are the key drivers behind this growth?
HPE's revenue growth is impressive, driven largely by their networking segment, which saw a 150% increase year over year. This surge is a testament to their strategic focus on AI and cloud businesses, bolstered by the acquisition of Juniper Networks. Additionally, their gross margin expanded significantly to 36.4% on a non-GAAP basis, reflecting strong operational discipline.
And how did they perform in terms of earnings per share?
HPE reported an adjusted EPS of 62 cents, which not only surpassed the forecast of 0.49 cents from 4 analysts, but also exceeded their own outlook range. This indicates robust profitability and effective cost management strategies.
Segment performance and strategic initiatives. John, can you break down the performance across HPE's different segments?
Certainly. The networking segment was the standout performer with a 150% increase in revenue, driven by strategic investments and the integration of Juniper Networks. However, the server segment saw a 5% decline, and hybrid cloud revenue decreased by 12%, indicating some challenges in those areas. Financial services remained stable, showing resilience in a competitive market.
How do these results align with HPE's strategic initiatives?
HPE's focus on scaling their AI and cloud businesses is evident in the networking segment's growth. The acquisition of Juniper Networks has been pivotal, and their ongoing innovation across the portfolio is setting a strong foundation for future growth, particularly as they aim to simplify their portfolio and manage costs effectively.
Cash flow and capital returns. Let's talk about cash flow. HPE reported $2.5 billion in cash flow from operations and $1.9 billion in free cash flow. What does this tell us about their financial health?
These figures highlight HPE's strong cash generation capabilities, which are crucial for funding strategic initiatives and returning value to shareholders. The increase in free cash flow by $420 million from the prior year underscores their effective cost management and operational efficiency.
And in terms of capital returns,
HPE returned $271 million to shareholders through dividends and share repurchases, reflecting their commitment to delivering shareholder value. This is a positive sign of financial stability and confidence in their future cash flow generation.
future outlook and guidance. Looking ahead, HPE has raised its guidance for fiscal 2026. What are the key highlights of their outlook?
HPE is projecting a revenue growth range of 17% to 22% for FY26, which is quite ambitious. They've also raised their non-GAAP EPS guidance to between $2.25 and $2.45, indicating strong confidence in their profitability. Additionally, they've increased the midpoint of their free cash flow guidance, now expecting between $1.7 billion and $2 billion, which supports their strategic investments and shareholder returns.
What does this guidance suggest about HPE's strategic direction?
It suggests a continued focus on scaling their AI and cloud capabilities, optimizing operational performance, and maintaining disciplined financial management. Their raised guidance reflects confidence in their strategic initiatives and the anticipated benefits from the Juniper Networks acquisition.
Key takeaways. In summary, HPE has delivered a strong fourth quarter with impressive revenue growth and profitability. Their strategic focus on AI and cloud, along with disciplined execution, positions them well for future growth. John, any final thoughts on HPE as an investment prospect?
HPE's performance and raised guidance indicate a positive outlook. Their strategic initiatives and strong cash flow generation make them an attractive investment, especially for those looking for exposure to the growing AI and cloud sectors.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on HPE's performance in the comments below. Until next time.